May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the US dollar, the most important one of the bunch. I'm going to handle this one first, and I want to be as thorough about it as I possibly can. Last week, we expected that there would be a turnaround as price pushed higher, corrected, pushed higher with a bullish break of market structure here both in both places, but this one is the bearish leg, the last bearish leg that was overcome. Price traded through it. So we have a bullish market structure break. And you expect this to be the natural area of demand. And you wait for price to come back here to find support for higher prices. That's it. That's the way this works. That's the way, if you've been watching my videos, you know that's what I look for. This one indicated that uh, the market shifted from bearish to bullish, and then that continued up. You're waiting for price to come back here. This is the nearest area of demand inside of the large area of fair value. Okay, and you look inside that and you put your Fibonacci retracement tool on it at the low to the high, move it over here to the left, and you see that there is a 50% of the trading range. This is your trading range. Above it is premium prices. Below it is discount prices. You want to take your shorts from premium. You want to take your longs from discount. And you look inside of this bullish leg for the area that will most likely show the market support for higher prices. You want to find the support area in it. And what did we find? We found this obvious bullish fair value gap right at the 618 area of this is the golden ratio, right? This is for the Fibonacci retracement tool. This is the magic area, all right? Up just above and below, this is the area you want to see price turn around, right? Below the 50%, the EQ, the equilibrium, all right? So, and I want you to see that price found that 705 right here on Friday and turned up. Okay, what does that mean? How significant is that? Well, if you move the Fibonacci retracement and check the last time it had a bullish leg before the retracement, we'll go to the top of that retracement right here. All right, that's zero. You see that price retrace to what? The same level, 705, right here. And you saw a price turn around right there. So this was another deep retracement up to before the new bullish leg would continue to go higher and form a higher high, higher low, higher high, and now we are looking for the establishment of the higher low. Are you following me? Good. Now, I want to also point something out. All right. Next week, come Tuesday, we have the core CPI. All right, core CPI coming. All right, and that's gonna that CPI data is gonna probably have a pretty huge impact on it. If the market gives a weak kind of a soft report, that'll allow the U.S. dollar to weaken, and that'll allow the euro, the pound, and the other its other counterparts to the dollar to move higher against it, move stronger against it. If it comes in slightly hot, and it's expected to be expectation is point 0.3. If it comes to point 0.3 and above, you're going to expect that US dollar to gain a little strength. And in the near term, that's what I expect. I say near term because longer term, the Fed just got a new nomination for by the president for a new governor to sit on the board of the Fed, and the indications are that the Fed will cut rates, and with Trump nominating people that tend to want to support his the direction of his administration, it seems like that will be the most likely outcome. Excuse me. So that would soften the U.S. dollar, and you'll see the markets, the equity markets, zoom higher. But that's in the longer term. That's the FOMC isn't for a good while now, right? We've got a couple of weeks for that. So in the near term, I'm looking for the US dollar to gain some strength. And I want to also point out, if we go to the monthly, I want to point out this. One, this was an ascending channel. All right. And the market, the US dollar index found the support line of that ascending channel. And you see that July close, that is a bullish engulfer. That is a very bullish indication. All right. And it closed above the high and low of June's candle. So this is a very bullish indication. Now we had a pullback uh, so far this week, this month, right? In the new month of August. But this could be the start where you see this tail, this shadow, the wick could be the start of the movement higher. Price is respecting the 50% of the July candle range. All right, and that's what you want to look for as price goes into discount of uh, the previous trading range, or the previous candle, and you want to see it respected, and it did. It's showing respect right now, and we're going to see if that means support for higher prices. Does that make sense to you? If it doesn't, you make sure you leave a question in the comment section. Now, I also want to point out something else. Let's go back to the daily. I want to show you something in a correlated market. All right, so we're going to look at treasury bonds. All right, and what I want you to see is the U.S. dollar and the treasury bonds. The 10-year I'm looking at right now are negatively correlated, meaning when the U.S. dollar is going up, you're going to see the bonds going down, and you can tell if when the bonds are finding support somewhere for higher prices, you can expect resistance to be found by the U.S. dollar to head down. Got it? Where are we at? Over here, we have a fair value gap. Price has found a fair value gap here, and the indication is that we should see some bullish pricing from this, right? But we're watching to see if the market holds here. This candle, if the market makes it down here to this candle, it should find, I will be looking for it to find support for higher prices. But in between that area and that area, that we're going to see some near-term bullishness in here in the US dollar up to this high. You understand? And if we get a close beyond that high, then I'll be looking for this fair value gap to fail. It's already been traded into already uh, to make that movement down into the bullish fair value gap. So it's weakened already. I'd like to see some liquidity snatched, a pullback, maybe into a fair value gap for higher prices, because this is the high of a news candle. That was NFP. That's why the market moved down in the first place. This is an NFP candle. So I'm looking for prices to take that low. Why? Because the NFP candles like that and the CPI data, they tend to be uh, what do you call it? Rated on both sides, the high of it and the low of it. The high of it and the low of it. You just look back, you'll see 6 to 7 times out of 10, uh, those big candles when they move like that, they're usually, the price usually comes back and fills them. There is no, what do you call it? Liquidity in this run up. What I mean by that is I like to see a move like that. That is liquidity low. There's no liquidity low in it. So for price to trap buyers, all right, they get them in the buy and then come back and zap them while the market rebalances a fair value gap or uh, mitigates an order block and then continues higher. So there's none of that there. So these tend to be an area where the market takes out that low, and under that low is relative equal lows here. We have relative equal highs here, and that could bring price all the way back up. And I suspect that we'll see that happen soon enough. But in the near term, I'm looking for prices to get a little higher up to that high. Now, uh, with that being said, I want you to understand. Last week, I told you, I was looking for the markets not to go past that the 50% of this fair value gap, and we did so. We went past about 75%, and I was like, this fair value gap looked like it may fail. It may fail. It may, if we see price get below it, close a candle below it on a daily closing basis, then we'll be looking at this low here as the draw on liquidity. Remember two things. The market is only going to do two things: seek liquidity and offer fair value. If it's not doing one, it's doing the other. All right. When price pushed past this fair value gap here, it wasn't offering fair value. And then we're going through another fair value gap. If it's not going to offer fair value, which would be a close below it, it's seeking liquidity. Got it? So I'm looking to see if we find support in this Friday candle is the beginning of it. All right. And for the near term. So I am bullish in this market, cautiously so. But after seeing a higher high, a higher low, a higher high, I'm looking for that higher low to be established. And at 705, the 705 fib, just like it was here, it seems to be a pretty good bet. That makes sense. I hope it does. This is the start of the market maker buy model on the right side of the curve. This is the market maker sell model, where we should be targeting that high, the originating market maker sell model. That's the way this works. All right. Anyways, I will see you in the next video. Leave a like or boost for this one, and make sure you leave a comment or question. I would love to see what your take is. Maybe you might see this as a wave count, wave one, two, and this could be I just counted this wrong. 1, 2, 3. Now this is I would think a longer three would be, you know, more apt, more apropos. But you never know. Maybe this might be 4 or 5, and then we're going to see the market turn down. You Elliott waivers. I'm talking to you because I find your analysis fascinating. All right. For those that are into support and resistance, we found support here at the support line of the ascending channel if you're a pattern trader. And this looks like the beginnings of the last bearish leg, the last bearish retracement of a continuing trend pattern. All right, we need two higher highs and two higher lows for a trend, right? Higher high one, higher high two. I mean, high, higher low, higher high. This needs to be a higher low. And the only way you're going to know it becomes a higher low is if it makes a higher high. So we're going to see. Anyway, I'll see you in the next video. Thanks for watching.